Hello everyone and welcome to my morning report analysis videos on Thursday the 10th of January with me, Rich Perry, market analyst at Hantec Markets. We've got a fairly sort of risk-off look to markets today. So a couple of reasons really. I mean, this ongoing government shutdown in the US is having an impact, and certainly doesn't seem so that the two sides are coming any closer to finding an agreement that would reopen the government. Donald Trump storming out of a meeting with the Democrats yesterday, and certainly it doesn't look all that great on either side really how this is panning out. But also what you saw overnight was China inflation coming in much lower than expected, actually really falling away on the PPI. Look at that, 0.9 down from 2.7 last month. 1.9 on the CPI, so again a fall more than expected there. So falling China inflation reflects sort of less economic activity really, and concerns certainly that the trade dispute is having an impact, and perhaps that was one of the reasons why we're seeing more of a sort of an attempt on the side of China to really get this moving, and the trade negotiations, 3 days of trade negotiations came to an end yesterday, and certainly suggested that there were sort of moves towards an agreement, but it's interesting that China are taking more of an effusive view of the negotiations than the US side, marginally you could argue. But certainly it looks as though that risk appetite today is a little bit lower. You've got the dollar, which interesting actually, the dollar was under pressure, decisively under pressure yesterday on the dovish comments from FOMC's Charles Evans, backed up by the views laid out in the Fed minutes from the December meeting yesterday, and that really did hit the dollar into the close yesterday. Decisive shift to the downside on that dollar index, and sort of breakout on euro dollar above 115 figure. That was a key 10-week high, and certainly looks as though that there is an ongoing dollar corrective move that we're seeing out now. But today's little rebound I think is ultimately going to prove to be a bit of a chance to sell really, because I think that we're going to see further moves to the downside in that dollar. So general risk appetite, as I said, negative. You've seen equity markets were higher on Wall Street, but the futures are lower, about 0.7% down on the S&P 500 futures, and that is sort of being reflected through the European markets today. Now, it'll be interesting to see if these are just seen as a little bit of a blip in the recovery, or is the recovery falling over. We're not entirely convinced yet either way. So something that I think will be sort of playing out as a development as the month progresses. Now, in terms of announcements today, well, we've got a load of Fed speakers. We've actually got Jerome Powell speaking at 5 o'clock today, UK time, but that also, he's also got other Fed speakers such as Thomas Barkin, James Bullard, Charles Evans again, and Vice Chair Clarida. So lots of Fed speakers that could certainly move the sentiment on the dollar and Treasury yields alike, and I think that it'll be interesting to see if the Fed continues with its line of dovishness, which it seems to be sort of laying out now in the opening days of 2019. In terms of data points, we've got the weekly jobless claims at 1:30. And also the ECB minutes at 12:30. So little real sort of expectation of too much there, but yeah, I think it'll be the dollar moves that will be coming in the wake of Jerome Powell more than anything today. So my chance today is the Kiwi dollar. Now what we've seen is that, as I said, the US dollar turning corrective, and that is shown through the Kiwi dollar, which made a sharp move to the upside yesterday, breaking a downtrend decisively through this medium-term pivot, 67.20, using that as a base of support to rally higher. But look at these momentum indicators: MACD crossover buy signal, stochastics accelerating, RSI accelerating above 50. The move also yesterday took the market above a little bit of a near-term pivot around 67.75 area, which we saw interesting 67.65 resistance broken to the upside yesterday as well. So a bit of a pivot around that sort of area of breakout support, 67.65. You can see that on the hourly chart becoming supportive as that market has retreated back. this morning. So is this a little buying opportunity? We'll look at the hourly chart. Momentum indicators looking as though they're just simply unwinding that overbought momentum. So I think it could be an opportunity to look at the Kiwi dollar again. 67.20 being that sort of near to medium term pivot still. Which is now a basis of support, and a move towards 68.50 is likely, I think, in the coming days as the dollar continues to correct and the Kiwi dollar strengthens on the back of that. So with that in mind, I wish you good luck in your trading today, and I will speak to you later.